Hey guys, welcome back to my YouTube channel. So in today's video we are going to discuss the institutional levels, okay, the bank levels. So without wasting time, let's get started. Welcome back to my YouTube channel. So in today's video we are going to discuss the banks and the institutional levels. It's not the high time frame order block, or it's not a higher time frame fair value gap or some supply demand, nothing. It's only time and price. So what do I mean by that? If you see over here, okay, the round of numbers, the big figure numbers which have most of the zeros in the end is a big figure number. What you have to do is that you have to mark on your charts these numbers like this, and it's 160 like this, okay. And now what you have to do is that you have to frame your trades on these levels and you have to target the another level. So what do I mean by that? Like these institutional levels are like this, like in round of numbers, because like whenever the currency exchange is done, like in this pair, right, this is GBP JPY. So whenever the currency exchange happens between pound and Japanese yen, they look for a round of number, okay. They look for a round of number, so it will be easy for them to calculate and convert the money from pound to yen. So that's why they want that price should fall into certain round of number, so they can do their transaction and then they can make profits, or they can use that money for their companies, okay. So that's why every time from these levels there is certain point of reaction, and if you are with the bias you can get into a good trade from these levels. If you can see over here, it was against the bias, okay, but the thing is that this price holded this level 168, right, and you would have got one sell from here if you go into smaller time frame, okay, and then you would have targeted this fair value gap over here. And the same thing happened over here. The price holded this level, but it broke and then it holded this level. And if you can get any pattern, the pattern which I used to say in my this YouTube channel, which is like fair value gap, structure break, breaker pattern, or optimal trade entry, there are lots of ways to enter in the market. If you see one of them in a smaller time frame, you can enter that and you can target your profits at next bank level, okay. And whenever it's like, see over here, it reached on next bank level, and now you would have taken you can take a sell from here. If you go on 5-minute or 2-minute time frame, from here you can easily take a sell, right, and you can target this next level. Sometimes it will not reach till this levels, but it's fine, because at least it can give you 1:2 or 1:3. Sometimes it can give you more risk reward. Like in this scenario it was enough risk of rewards. Like you are over here also, if you would have put your stop loss above this, and it would have been a great sell from here. And like same this thing over here, like the way I say that session high and low have liquidity above, right, so this is a Asian session high, okay. So what will be there will be a buy side liquidity. So in New York hill zone it took the buy side liquidity and then it sells off, so it's a clear indication, right, for a sell market. And we know that this is on this level also, okay. So that's why this is important. The thing which you have to do is you have to frame your trades close to these levels, okay, and you have to not take a sell on this. Like if market is falling from here, you have to not take a sell over here, okay, because it can show certain retracement from here or certain reflection from here, okay. So that's why what you have to do is that you have to be with your bias and try to take a buys on, like whenever it comes over here, and wait for a pattern. It's not like that you just put a buy or sell limit like this, like for example like today's one, okay, like it broke down, and when it reaches over here, if you would have like blindly put your sells over here, it would have been clear loss, right. If you would have been put your sells like this, it would have been losing trade, right. But the thing is you have to wait for a pattern, okay. And what do I mean by pattern? Like you have to wait for a structure shift or you have to wait for a fair value gap, okay, and then you have to take, and if it is lining up into this psychologically big figure number, then it's a very good trade for a sell. But it didn't showed us any structure shift or something like this. It's clearly passed by from this, and now I guess it's going for this level over here, okay. So this how it works. And you have, what the thing you have to do is you have to go into your charts and you mark these levels on any pair, okay. It's not like this pair only, any pair. Go into your charts, mark these pairs, like mark these levels, and then try to look that whenever, like, is it the like pattern is forming over here or not, okay. If it's forming, that's great, you can take a sell from here and you can take profits. And you have to look for it. And if you guys have any questions, okay, if you guys have any questions, you can comment down and let me know that if this video was helpful for you or not, okay. And if you like this video, please like, share and subscribe, and turn on post notifications, because I keep on posting these type of contents. And let me know that this thing was helpful for you or not in this comment section. So until next time, good trading and good luck.